Another principle we have to consider at the moment is timing principle. Why? It allows you to get relevant information. It ensures consistency. It facilitates comparison. It enables you to have an analysis. It enables the reader to know where to put their concentration. So timing principle is very paramount here when we are preparing end of year financials. Statements like cash flow statement, the income statement or the statement of financial performance, and lastly the statement of financial position, which we call the balance sheet, will require you to have this kind of timing principle. It will enable us to know at the year end, do we have accruals or prepayments. Most of these statements have a timing element. For example, we normally say statement ABCD as at, or for the period, or for the year ending. When you're using a calendar year, we shall look at January to December. If you're using a fiscal year that ends every 30th June, we shall look from 1st July of the previous year to 30th June of this year. If you're using a fiscal year that ends at 30th of March, we shall look at 1st April previous year to 30th March this year. So timing is very important at this moment. This principle will help us to create cut-off periods to know by this date what were we having in terms of assets. These assets are very important because we have current assets like the receivables, like the inventory. We have to know what was it by this cut-off period. Then the balance sheet, we have to know our stand as of that date. What were we having? Still, in terms of liabilities, we have to know, do we have any payables by this time? So timing is very paramount here, and for the sake of shareholders, they need to know as per that period to create comparison, to see performance. We cannot have trend analysis and compare performances unless we are able to have the cut-off periods. We are able to look at this for this particular period. So take timing key. Take timing principle very paramount at this moment. As we look through the reports, as we audit, as we review, we are seeing a lot of timing issues. A transaction happens on the first day of the following month when the year has just ended. Please push that transaction to the following year. If your year ends 30th June and the transaction happened on 1st July, please, even if it's a payment for the transaction that took in the previous year, push this payment as revenue received in this financial year, in the following financial year. I'll make another video about accruals and prepayments because